All right, Robinhood Portfolio, episode 27. Today, the portfolio spiked up almost $250, and in the after hours, I'm almost down $2. So we're going to go on ahead and get to what exactly happened today. Obviously, the portfolio has really spiked up here, and it's going to go for the total weekly gains, $219. You can see that tremendous spike towards the end there. The portfolio spiked up today. For the month, I am up $400. For the past 3 months, I am up $1,500, $1,500. And for the past year, I am up almost $2,000. So what really happened today was there was a announcement earlier in the morning about U.S. and I think it's U.S. and Canada trade deal that just went down, and I guess the market really liked that. Throughout the recent news with the trading war and the tariffs, this was a really good sight to see that the U.S. is still making trading deals, and the trading deals are going smoothly. So, the market really liked that, and everything. The whole entire market was generally up today. There was a little bit of a pullback towards the end, but that's expected. People were taking profits off the table. But the reason why my portfolio spiked up was because I have been doing a lot of day trading. I have been doing a lot of in and outs, swing trading stocks here and there, and just trying to get ahead. I mentioned this before, how I really want to get the portfolio up to $20,000. If I can do that by the end of the year, that'll be a goal that I have achieved, that I wanted to achieve, is to get this portfolio up to $20,000. But I'm not going to be able to do it by just holding stocks. I'm going to have to actually put in the work here, which is okay, because on the Robinhood app there's free trading. Free trading with the Robinhood app, so it really takes advantage of those free trades. I know on other brokerages and other stock apps and accounts, they usually charge you for every time you trade. It's normally about but anywhere between like $7 or something like that. But every time you trade, every time you sell or buy a stock, you have to pay a fee, and that sucks. That's why I think a lot of people like the Robinhood app, because there's no fees for whatever you do trading. So let's get to it. Let's get to it about my portfolio. My portfolio spiked up here because I was holding options costs for Visa and MasterCard, and as you can see, my portfolio is quite significantly changed from the last video. There have been a lot of stocks that are gone, particularly Starbucks. Starbucks is not in my portfolio no more. I still think they're a great company. I still think there's a lot more room to grow. But again, I just need this. Right now, I'm pushing for that $20,000 portfolio, and I just don't think that Starbucks is going to get me anywhere close to that. So I need to get into these companies that are growing, that are increasing their value, that have good spreadsheets and balance sheets and all kinds of stuff. And there's certain sectors that aren't as bullish as other sectors. Telecom is not so much of a bullish sector over technology. For example, technology is a very bullish sector right now. But you guys can see my portfolio, and I talked about this before. I talked about the call options for MasterCard and Visa. I did put those in. It's a good thing I sold in the morning, because all the MasterCard and Visa did kind of trend back. But as soon as when the market hit, I think I was up about $245 on those call options and the call options for Visa and MasterCard. So let's just take a look. Sometimes they kind of show the options. So yeah, there it is. That was the contract that I held. I sold it much more than $23. Right now, that contract is worth $23. But when I sold that contract, I believe the contract was worth about $145. And I think when I sold Visa's contract, that contract was worth about $53 to $80. It was one of it's either $53 or $80, but it was one of those. But the portfolio took a massive leap in the morning thanks to the trading news, and I was holding those call options from Friday, so the portfolio jumped up, and you could actually see the call actions actually going up. I held a contract with them. 48. So right now the call option is worth $48. $48. But I'm just going to go ahead and look at Visa's call options here. And I don't see Visa's call options anywhere, but I did have Visa, I did have MasterCard, and that's the reason why the portfolio spiked up in the morning. It just completely shot up, something that I'm very grateful about. So you guys look at my portfolio, you guys are seeing what I'm trying to do. I'm putting these growth stocks in. I have kept a little bit, some of my dividend aristocrats, stocks, certain stocks are gone. Verizon's gone, 3M is gone, Starbucks is gone. I did originally have Costco in here, but they're gone. What stock I want to talk about right quick is Boeing Airlines. They have been on an absolute tear here. I'm up $75, and I just recently bought this stock. I don't know what the news is, but they make deals every day. I really don't have to look at any news for Boeing because I get it from my Seeking Alpha reports when it shows that Boeing is buying, these airlines and they're winning contracts from the Air Force and this and that. And, they're just everywhere. They're always winning these contracts, and they're a very profitable company. They have very, very high earnings expectations. And the stock is definitely a buy. I would definitely say they are definitely a buy. Boeing Airlines, a very, very good industrial stock. I actually like this stock more than 3M. I bought 3M because they were a dividend aristocrat, but I have Johnson & Johnson, Procter & Gamble, already dividend champions in my portfolio, so I ended up selling 3M high. What's another stock that I talk about? Amazon's back. Alibaba's sold, so Alibaba is gone. I sold around 164. Amazon is, the reason. I guess I'm going to say the reason why I bought Amazon is because the retail market. I needed I needed a retail stock because I sold off Costco. I jumped back into Costco and then I sold them again. Guys, I just don't like I don't like Costco's valuation right now. I just think that if the stock can get somewhere near about $200 or below that $200 mark, I think they're a buy. But right now, this Costco's valuation is really, really just, I would say, oversaturated. It's really expensive stock, and for good reason. They are a great company, but right now I just think they're overvalued. And that's not to say that Amazon is not overvalued. Amazon is definitely overvalued, but they're overvalued for a good reason. They do a lot of things. They do literally everything. So. When you're buying into the high, and you're thinking that it's going to keep going up. Well, guess what? That's a little bit of a wake up call. It's not going to keep going up, and you're going to go back down. You're going to lose a lot of money. So these little dive in and just try to hurry up and make a quick buck. It's not going to work with Amazon because I've had it work sometimes with Amazon, but not this time. Down $18, and the thing is that. Amazon, the reason why I bought it was because the retail market is coming up. There's a big couple of weeks for the retail market. Christmas is going to be here soon, Thanksgiving, and there's going to be a lot of online shopping. And if the earnings reports are anything like Amazon, if the earnings reports are anything like it was for last year for Amazon, they really, really crushed earnings last year. They totally dominated the retail sector last year, and the stock, that's a big reason why this stock is $2,000 right now, because they just literally dominated the retail market. But Amazon is it's an expensive stock, but it's not a stock that I can keep buying a lot of shares of. But you know what? This is a good hold for the Black Friday, the Christmas sales that's coming up. The Halloween is coming up, Thanksgiving, all these retail sales that people are going to be shopping and shopping for Christmas, and that they're going to have that Black Friday sales and Cyber Monday and this and that. This is the time. You want to be in Amazon right now. You want to be in the Amazon right now because those days are coming up, and I just have huge expectations, and they're going to. I'm very confident that they're going to do well in that department. So. Boeing, I talked about Boeing, MasterCard, I increased my shares with MasterCard. Visa and MasterCard are just sort of just tag teaming together, trying to keep this portfolio spiking up. I don't expect huge returns from MasterCard. They're slowly just going to grow here. I've said this before. I think that this is the best graph I've ever seen, one of the best graphs I've seen on the stock market currently. And it's just amazing how Visa and MasterCard have continued to have that upside about these analysis are saying, and Visa has an upside of about 20% more, and MasterCard 7%. So the growth is slowing down, but not slowing down to the point where investors are scared to throw money at the stock. Visa, MasterCard are pretty much buy and hold forever stocks. Very, very interesting. Very, very excited. Another company that is in my portfolio is really an odd selection than I'm normally used to pigging when it comes to stocks is Canopy Growth, CGC, ticker symbol CGC. It's a really odd stock to have in my portfolio because there's a tremendous amount of risk that is associated with this stock. This is one of those weed and cannabis stocks that everybody's been going crazy about, and the weed sector has really been blowing up here these last 3 months. And it's a sector that I've really been paying attention to. People are saying this weed sector is like the next Bitcoin or something like that. I wouldn't go that far, but definitely have the weed sector has spiked up here, and I have been in and out of CGC. I've been trading CGC, waiting for it, trying to get in a respectable average cost, and I think at that $48 mark, there's a lot of support there. I know this stock got lower than that, and this stock actually dipped all the way down to I would say about $44. I think the stock got all the way down to $44, but yeah, Canopy Growth is the only weed stock that I like. I know they have a very high volatility, volatility in the sector as far as the stock price goes. This thing can literally dip at $25 instantly. The stock can, again, I'll say it again, it says high volatility. The stock can dip $30. The stock can dip almost $10 instantly because if there's bad news. But Canopy Growth is they are growing. They are really. I would say this is one of the safest cannabis stocks on the market right now, as far as as far as investing, and they do a lot of stuff. I just like them. I don't know. I just like them. They have all those medical cannabis stuff, soft gels. I'm just reading off the about Canopy Growth on the bottom, all the stuff down there. But I really done my research with this company. It's definitely one of the safer stocks. I've seen other weed stocks like Tilray, which I think is extremely volatile. I think Tilray is definitely not safe. That thing got up. I think Tilray got up to $300, and then it dipped right back down to $100. So if you bought around the $300 mark, that is really a huge loss on your part. But there's Tilray, there's Cron. I think there was another hot cannabis stock right now, I think called IGC. I think IGC is really hot right now. I think they broke $10 a day. But Canopy Growth is really it's a little bit more safer than those other weed stocks. It's trending up. They have a good support, and a lot of people are just waiting for October 17th. So a lot of people are just waiting for October 17th when the legalization opens up a little bit more for cannabis stocks. So that's really the only thing that's holding the cannabis stocks and marijuana stocks back is the legalization. So I figured that I was going to throw some money into CGC. Why not? This is sort of a low risk, high reward type of play. I mean, don't get me wrong. There's some risk here. There's definitely some risk, but with a portfolio diversity of only 3% and an average cost, a really friendly average cost. I really like that average cost around $48. I think this is a good buy around that $48, $47 mark. I think that this could definitely play off long term. So, I eventually, I know this is not going to pretty much stay in my portfolio. I know that I'm going to pretty swing trade this out the first moment I get when it spikes up into a higher average cost. So, that's really it, guys. The portfolio is being trimmed down. I'm looking at sectors that are really bullish. I'm not wasting any of my time with the telecom anymore. I'm not, the utilities, which are they're great sectors in their own right. I think Verizon today announced something with 5G, which is going to really have big implications later on down the road. Whoever gets out that 5G first is going to the stock price really is going to just spike up. But what I think is that the bullish sectors that I want to be in, the technology and e-commerce and what's another one? Healthcare. I think healthcare is a good one. In relationship to my Johnson and Johnson shares, which I've been holding for a while now, up $192, which is a really amazing return. The stocks like Amazon just continuing to grow. It doesn't really matter. It doesn't matter where I buy it. I'm currently down on Amazon. I'm down $18 with an average cost of $2,023. But that's not, even then, even with this high average cost, there's only a portfolio diversity of only 15%. So not worried at all about this stock. I know this stock is going to bounce right back up when the retail market gets around Black Friday and the Christmas sales are really going to just, take care of itself. So, Procter & Gamble, I've managed to lead Procter & Gamble in my portfolio. Again, they're a dividend aristocrat. I think that they have a little bit more potential. If they need to figure out their organic growth sales, and once they do that, I think the stock would be a little bit more safer to invest in. I know they're a very old company, but these old companies that are stable, that have been paying their dividends for forever, those are the stocks that I like to be in. So, but at this point in time, guys, the goal is just $20,000, and that's been spinning in my head lately. $20,000. How am I going to get there? What am I going to have to do to get to $20,000? And I want to get there. I want to try to do my best. I'm going to try to look at stocks, and I'm going to try to evaluate my positions. What should I sell? What should I keep? Starbucks was in my portfolio for a while. It was in my portfolio for a long time, and then I've said this before. I'm not scared to take the money. I'm not scared to take the money and walk away, and that'll be that. And Starbucks can dip tomorrow. Dip all the way down to $45. I hope not, but they have tons of growth, they have tons of potential. But when the money's there, guys, you got to know when to fold. You got to say to yourself, okay, I'm walking away. I'm shutting down a lot, and I'm gonna lock in those profits, and I'm gonna walk away with the money because this bull market isn't gonna last forever. It's not gonna last forever, and there's a lot of things that's on the line when you invest in stocks. You want to be in the safer ones. You want to be in the safer ones like Apple, Amazon, Visa. I think those are really extremely safe stocks that's going to continue to keep growing here. But what goes up must come down. What goes up must come down. Again, pending a market crash and everybody starts losing their minds, I think this bull market has a little bit more room left to run. But, I'm not trying to time the market at all. I'm not saying to myself, oh, okay, the market's going to crash tomorrow. Let me just sell off everything. No, that's not the goal. Again, goal is $20,000 by the end of the year. And I said before, I don't think I'm going to make it, but if I keep having days like this, I think I will make it. I think I will make it. So $243, guys, that is just a remarkable return, almost up $2,000 for the year. Of 13%. I'm closing in on the Nasdaq. I think the Nasdaq is up about 15 to 16%, and right now I'm closing in on the Nasdaq. I'm closing in on $2,000, guys, $2,000, and that's just brilliant. That's just remarkable. So let me know what you think. Let me know about. I know Starbucks is gone. I know a lot of people are probably not going to like that, but again, I take the money. I'm trying to be smart here. I'm not trying to, but I like to think of myself as a buy and hold investor, and I like to hold my favorite stocks like, Apple, Johnson and Johnson, and Procter & Gamble. But I wouldn't necessarily say that Starbucks was one of my favorite stocks. I really only bought Starbucks because it was on sale, guys. It was on sale. When I bought Starbucks, the stock was $48. That was a steal. That was a steal. I'm not really sure why people thought Starbucks was just going to dip all the way down, just go away. It's not going away. Okay, it's not. But I wanted to get into McDonald's. I love McDonald's, and I love their dividend. They've increased this dividend again So $1.16. So they're increasing that dividend over and over and over again. And I'm just looking at McDonald's and I'm like, man, I gotta get in. I gotta buy this when it dips, and when it gets back down to like $155, or when it got back down to like $149. I remember that those were really good prices. But McDonald's is increasing the dividend. I like them a lot, and I actually like them more than Starbucks. So very interesting. Very interesting that I say that, considering how I held Starbucks for so long. But again, I'm just showing you guys my portfolio one more time. Sales still here. Amazon is thrown into the portfolio for upcoming Black Friday retail sales, e-commerce sales, Boeing Airlines. Again, this shouldn't come surprise to no one. Yes, it's an expensive stock. Yes, I can accumulate a lot of shares, but they just do so much. They make deals every day. Am I seeking alpha article reports? They're always making some type of deal. They're making these Air Force contracts, these airplane contracts. They're just all over the place, and they have a killer high earnings ratio that they usually have to beat, and they normally do. So MasterCard thrown in the portfolio with Visa to sort of tag team together, trying to keep this portfolio on track. Dividend champions, Johnson & Johnson, Procter & Gamble, they're just there to just give me that nice, competitive dividend, and really just some side cash on the side for this and that. They're buying holds. They're the pinnacle of buying holds. CGC is probably the riskiest position in my portfolio, but I tried to manage the risk by having a really low portfolio diversity, only 10 shares. 3% of my portfolio, that's not really a lot. That's really a low risk, high return sort of expectation here, some sort of low risk, high low play here. And they're Apple, just a solid, phenomenal company. So that's going to do it, guys. $243, and I'll see you next time.